Hello my fellow investors, and welcome back to another stock analysis video. Today guys, let's do another one of Tony Myers' stocks. I believe this is the last one from him. After this video, we're going to get to everybody else's recommendations. He has had a couple of them that he's asked me for a while now, and I have not gotten to it, so getting to it now, so please bear with me. Again, if you guys would like to see which ones are coming up next, you could check out the spreadsheet link in the description below. But today guys, let's actually take a look at the company Quanex. Now, I have no idea what this company is about. If we actually take a look at over here, we see our solutions include insulating glass spacers, vinyl profiles, windows and door screens, cabinets, components, fenestration components. I don't know what fenestration is. Vinyl extrusions, rubber extrusions, kitchen components. So they do a bunch of stuff, right? They do stuff for like your house, something that like you could use for like doors, obviously, like your kitchen, that kind of stuff. So that's a pretty interesting kind of business. However, I don't believe that this is necessarily that inflation proof, and when people tend to get into hard times, this is one of the things that they're probably going to skip on. But nonetheless guys, let's actually jump into their fundamentals and see if at the current share price it is a buy. Now, before we actually get started with the numbers, guys, let's actually take a look at their earnings. They actually had earnings as of the 15th of December, and you can see that their EPS normalized actual came in at 75 cents, which was a beat by 15 cents. Same thing with the GAAP actual, and the revenue came in at $307.53 million, which is a beat by $12.18 million. Coming over here into the calculator, we got the ticker symbol for an X, market cap of $784.52 million and a PE of almost 13 with a current share price of $23.68. Looking at this company on the 1-year graph, we can see that this is pretty much all over the place. My god, it was just massive spikes. And on the year to date, you can see that they were down 4.05%. 52-week ranges is $18 to $25.94. You can see that we're definitely on this higher end of this 52-week range. Coming back into the calculator, we do see that they do pay out a dividend, which is a yield of 1.35% for 32 cents per share, a payout ratio of almost 12, a 5-year CAGR of 15% with 0 consecutive years of dividend payment. Looking at this on the 5-year history, we can see that ever since 2018, they put in 8 cents and they haven't even increased it once. So at least they're pretty consistent about it. Now, if we actually come here to the 10-year, we can see something very similar starting in 2013, where they had a 4-cent dividend and they kept it the same up until essentially 2018 September, when they brought it up to 8 cents. So this is not a case that they are cutting dividends or any of that. It's just that they're really consistent when it comes to that dividend. And based off of the current shares outstanding and this 32 cents in annual dividends per share, we can see that they pay more than $10.5 million in dividends every single year. And then looking at this based off of the 5-year average free cash flow, they have $58.31 million after this is paid and $54.37 million based off of their last year's free cash flow. And if we take a look at these ratios, well, the guys are really tiny. 15.29% for the 5-year average and 16.22 for the last year's free cash flow, meaning that they can continue to actually pay this dividend, and not only that, but they can even increase it if they wish to do so. And now let's come over here into the fundamentals, starting of course with the net income. We got 5 years ago of $26.6 million to 1 year ago of $88.3 million. Now we're getting into the point, guys, where a bunch of companies, 2020 is going to be 3 years ago. Now this 5-year, it is an increase of 232%. Take a look at this though. Very weird outlier that happened here 4 years ago. Negative $46.7 million. Kind of strange, not gonna lie. But aside from that, they kept it going pretty good even during COVID, which is again very surprising, increasingly up. So that's all good and dandy. I'm gonna have to give this though around like a 60%, because again, I don't know why this 4 years ago net income fell into the negatives. Looking now at the free cash flow, 5 years ago of $78.1 million to 1 year ago of $64.9 million. That is a decrease on the 5-year of 17% with an average of $68.84 million. Now, that decrease actually goes beyond the 5-year, guys, because ever since from 5 to 4 to 3 to 2 to 1, it was consistently decreasing. Not only did they decrease this off year that we even saw here in the net income 4 years ago from 78.1 to 71.5, they did recover that 3 years ago, which again, surprising because COVID was 3 years ago. But okay, I guess they're pretty COVID resistant, though. To be fair, they do have a lot of products that have to do with in-home kind of things, so actually that's not surprising. I kind of take that back. But then the following year they came down massively from 75.1 to 54.6, and then 1 year ago they went up to 64.9. So this is all over the place. It's overall decreasing, though. I'm gonna have to give this like a 30%. Looking now at the revenue, this one's actually looking not too bad, actually really good. But now we kind of get something of the inverse almost. 5 years ago of $889.8 million to $1.2 billion, increase of 37.28%. And what I mean by kind of the inverse is that, well, 4 years ago, which is what we saw as an anomaly in the free cash flow and the net income, well, 4 years ago it actually went up, right? It went up to $894 million. And then 3 years ago during COVID, it went down. Again, that's very, very weird. I guess you could think that, well, maybe their capital expenditures went down over here, and this was actually the revenue, so maybe I take back the take back. I don't necessarily know, but we definitely do see a decrease in the revenue during COVID. Overall, guys, I'm gonna have to give this actually like a really good grade. This is very consistently increasing aside from this outlier 3 years ago, but again, COVID related, it wasn't even too much of a hit. I'm gonna go with at around like an 85%. Still very, very solid overall. Looking now at the assets minus the liabilities, it's actually looking fairly good as well. As of today, they have $464.8 million. And if we actually take a look at this, well, they went down from 5 to 4 years ago, which again is something that we've been seeing. And then from 4 years ago all the way to today, consistent increase. Really, really nice. Average total assets around $700 million. Average liabilities, it is $294 million. And doing this difference, we get $407.1 million. I'm going to give this once again, guys. Well, honestly, no, I was gonna give this like an 85. I'm gonna give this like a 90. This was actually really, really solid overall. In the cash flow minus the liabilities, actually kind of interesting. This is increasing a significant amount, and in fact, you can see that from 5 to 4, nice increase right there from 269.9 to 243.4. And then they came down 3 years ago, again COVID related, perfectly understandable. And then from 3 years ago to today, that's a massive decrease, going from 260.7 million to 195 million. Again, all of this is in the negatives. Average cash flow minus the average total liabilities, we get negative $242.36 million. I'm gonna give this once again like at around like an 85%. Looking now at the shares outstanding, very, very interesting because, well, they have had instances where they have increased this. As you can clearly see from 3 years ago to essentially today, they went from 32.6 to 32.9, but they're still down overall when it comes to this on the 5-year, going from 33.1 million shares to 32.9 million shares, a decrease of 0.6%. And from the previous year to the current year, that is a decrease of 0.3%, which is actually hilarious. It's the exact same. However, if we do get one more year, guys, understand that this will essentially be an increase in shares, because 4 years ago it was 32.8, and if we do not get a decrease in the next year, obviously once we move forward one more year, then, well, this is going to be an increase. But as you can clearly see, it barely passed, but they do have instances of increasing, so I'm actually going to go with around like a 60% on this one. And lastly, when it comes to the cash equivalents, they currently hold $55.1 million with an average of $43.63 million. And if we come over here to the overall grades, we gave the net income, guys, 60%, free cash flow 30%, revenue 85%, assets minus liabilities 90%, cash flow minus liabilities 85%, and shares outstanding of 60%, for an overall grade of 63%. Biggest hurdle, it is that free cash flow. It is consistently well, I wouldn't say consistently, but it is decreasing at a pretty decent rate, and that right there is a big turnoff for me. But if they were to get that fixed, guys, this would easily be 70% or more. So now let's actually see if at $23.68 this is looking like a buy. Let's make revenue and predicted share buyback assumptions for low, medium, high, while keeping the required rate of return the same. So let's actually come over here to the growth tab, and we can see that the forward is estimated at 5.61. Okay, that's actually making it really easy for me. So let's go with 3%, 4%, and 5% for the low, median, high. That's great. And for the predicted share buyback, I think that on median they might actually do 0. Let's do 0.5% when it comes to the high assumption, and -0.5% for the low assumption. And with this, guys, we can see that the current share price, well, it is still looking overpriced. The target share prices are $11.07 to $11.99, and then adjusting for debt, this comes up a little bit to $11.75 to $12.68, with a margin of safety of 5, 10, and 15%. This puts me between $9.99 to $12.04. So as it currently stands, this is overpriced. Obviously, every investment is the present value of all future cash flow, and this is not financial advice. You can have these calculators and make your own assumptions. They are available for free. The link is in the description below. It is called the All Calculators video. That link leads you to a video that video shows you how to use all the calculators, right? There's chapters on it, there's timestamps, and you could go to the calculator that you want. So again, have it free, guys. More than happy to give it to everybody for free. This one, as well as my book value one, the revaluation one, and even a dividend tracking sheet. So if anybody wants, have it all for free, guys. And again, I also made available the new stock recommendation spreadsheet. It's mainly just reviewing, just so that way you know when I'm planning to make your guys' videos, and I will update it as well when they're complete, or like if I have to push something further one day or so because I have plans or something. All of that will be updated, so you guys can have all of that for free, guys. All I'm asking for in return is just like, subscribe, comment. It really does help out with the algorithm on YouTube. Thank you so much for the support in 2022. And I think 2023 is going to be even better. And with your help, like, subscribing, commenting, and sharing, it could be one of my greatest years pretty much ever in my almost 27 years of life. So I really do appreciate it, everybody. So now let's actually come over here into this dividend, because the yield is pretty small, and so is this annual dividends per share, putting in $5,725. This nets you, what, 241.78 shares, and this only gives you an annual dividend increase of $77.37. Not too big of this when it comes to a dividend, and in fact, even when it comes to this kind of free cash flow, it's telling me that it's still overpriced. So yeah, the fundamentals are okay. The free cash flow could be a little bit better, but it's just not really my cup of tea at this current moment. All in all, thank you so much for the recommendation, Tony, like always. And you know, it's a pretty good company, at least when it comes to their fundamentals. I just think it's a little bit overpriced right now. Maybe in the future, if their fundamentals get better or if the price drops, then you could take a look at it again. And if you decide that you want to buy it, then, you know, make that decision for yourselves. That pretty much does it for this video. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. As I just said, you guys can follow me on my new tech sites. Link in the description below. So with that said, peace out. And I will see you all in the next stock analysis video.